Good morning. Today is 21st of December 2020. My name is Neville Hornsey, market analyst for YouTrading, and
my name is Joel Frank, also market analyst at YouTrading.
And today we're going to be talking about the goings on from the weekend, starting off with the S&P 500. What have you seen recently in the fundamentals that is causing all this chaos?
Yeah, well, man, there's a few things. I mean, we were just talking about, like, literally just before we started the podcast, we've got bad coronavirus news coming from, well, not just the UK. So there's this new variant that's spreading in the UK. So lots of countries have issued travel bans to the UK now. There's also a variant coming out of South Africa that's got people worried. So there is coronavirus jitters. But there's a couple of other things going on as well with the S&P 500. So over the weekend, the US Congress agreed on this another round of fiscal stimulus, 900 billion, which is good news. But a lot of people talking about how the S&P 500 might be in a bit of a sell the news reaction. You know, we had all that pumping last week and then over the last few weeks on anticipation of this deal. And now we got the deal, people, you know, taking profit on their longs or whatever. And then another thing you got to consider for the S&P 500 right now as well is it just included Tesla. It's going to include Tesla from today's open.
Yeah, so I'm trading today with Tesla in the S&P 500.
Yeah, exactly. So and Tesla's really volatile, and that's going to change the way the index moves a lot now. It's going to be a choppier index in future. So, a lot of interesting things going on. Yeah, I mean, have you got anything else to add to that, Nick?
Yeah, I was going to say, like, on Friday, did you see the price action where they basically pulled it down, and then like 10 minutes to go to the to the end when the algos finish at 9 p.m. or for us, then, just like ripped higher. So it was interesting to sort of see that happen. And then for today, if I just move to the charts. Right, so on the 4 hourly even, like you can see how we've been recently coming back down to like major sort of support, which was resistance before. And now, if we do target lower because of this risk off situation, we'll be targeting, these swing lows from the 11th and 14th. So I can imagine we get a bit more bearishness today. And that Tesla inclusion, it's either going to be profit taking for a lot of people who've had it all pumped up. And we're still waiting for the Congress and Senate to do this 900 billion. So if that gets signed off today, who knows what they're going to do? But
exactly.
Bit weaker today for certain at the open.
Yeah, I mean, Nev, like, if it does sell off down to those levels that you pointed out, do you think people will be wanting to buy the dip like they have been for the last 6 months or so?
I think. Stonks go up, so everyone's looking to get better prices. But this grind higher from the 4th of November, it's just been grinding higher as people basically try and get into the stocks, waiting for all these bullish things to happen, like the COVID stimulus bills and things. But at the same time, channels that rise generally break lower, so we need something very positive to come out of the news recently to get to the 3,800 definitely. And at the moment, it definitely feels like the news is pivoting towards being more bearish. So I think buy the dip, but that dip might be all the way back down to the end of August swing high. That's kind of where support looks like to me. But until we get there, there's on the daily, we've got the 200 moving daily average. That's way down, like 3,200. That's a good level.
I can't see us going that low.
Yeah. But so with that rising and like you see, we are pushing higher and higher. 3,600 looks like the reasonable amount of buy the dip sort of support there. But it's a risk off today. And if the bill gets passed, then maybe that's enough to make people think the stimulus checks coming and the liquidity going into the markets will give it rise. So we'll see.
We will see. Yeah, we will see. It's a good point you made about that. Like, we haven't had enough good news to continue that rally just yet, though. Like maybe we're going to need to have like a Brexit deal. Maybe we're going to need to, well, I can't really see the coronavirus news getting any better.
No, that seems to be getting worse. And
because the vaccine optimism by this point is kind of priced in, isn't it?
Yeah, you would have thought so. And with new variants, they're going to have to now catch up with that sort of side of things as well. The vaccines are being targeted for a certain amount of people at a certain age group in England, especially, but for one particular coronavirus. If we've got 2 or more to contend with, then we're behind the curve on that. So it's like, that's not good.
I mean, I think from what I heard, they don't know yet, but I think the scientists were saying that they think the new variants will probably the vaccine will still work against them.
Yeah.
They think, but they don't know yet, which is a bit concerning.
Yeah. And they would have thought herd immunity and all that sort of thing, if we'd have got through the first vaccine sort of stages, would have kicked in as well, and that would have helped. But the fact that, the travel bans are starting to happen, tier 4s have been created for the UK, and now we've got things like oil coming off. It just feels risk off across the board. So, not good.
Yeah, I was about to mention oil as well, actually. We might as well pivot to talking about oil. Because I guess right now, oil market's very much focused on the demand side fundamentals. There's not really much to talk about with supply side fundamentals at the moment, is it? I didn't really see much news over the weekend.
No, I didn't see anything over the weekend, but generally there's been how you sort of seeing the build, the numbers that are coming through, have you been monitoring the actual supply? Is it still at crazy levels it was the first time COVID came? We had COVID plus Saudi
sort of
price war. That was insane. Do you remember the that front month WTI futures contract went -40 or something?
Yeah,
That's crazy.
So I don't think we're in those sort of areas of supply. So the sort of the $50 was seemed to be a key level that people were targeting, but I think the risk that's coming in with COVID and the lack of demand generally.
Yeah, because with the renewed lockdowns and stuff in Europe, and I mean we've seen it increasingly in the US as well. There's a risk that in the short term we're going to get big builds in inventories, the IEA inventories and APIs and all that kind of stuff. And largely, I think crude oil markets have been resilient to that in the last couple of weeks. Because I don't know if you remember, but I don't think it was last week. I think it was the week before. We had a 15 million build in. That wasn't last week. That was 2 weeks ago, wasn't it?
Yeah, and that was data from the week before as well. So it's a couple of weeks into that now, but WTI was moving up all through last week, and now today's action is definitely sort of suggesting that they're more concerned about this recent COVID stuff. So
yeah. But I was only bringing that up just to say, just to kind of but suggest that WTI doesn't seem too focused about this narrative about building inventories just yet. But then, like you say, I mean, the entire market is concerned about all this latest coronavirus news. So, I mean, that if that continues to weigh on stocks, it's going to continue to weigh on oil probably as well, isn't it?
No, definitely. And if I just flick to the chart, again on the daily, if you look to the left, just market structure, for a technical analyst, you look left and you come to the 6th of February, pre the craziness of COVID and the Saudi sort of OPEC plus stuff. And we're kind of at those levels. So, we've retraced so much of that madness, but we just didn't quite get to the $50 level. So that's definitely something that will still be on the minds of people. But we just need to get through this latest corona data and just work out how bad, supply and demand is really.
We'll see. Fair enough.
Moving on to the dollar itself, because the WTI is closely tied to the dollar, and
that's true.
You would have thought that with a bearish dollar today, the WTI would have had a pump up. But yeah, obviously the news is working against both of these assets at the moment. So yeah, dollar has come off. I don't know how much of a percentage that is, but it's coming down to like support at 90.3 at the moment. And then if I just look at...
Oh, my chart must be frozen or something. I was just looking at my Dixie thinking, hang on a minute, what's going on? Mine must be frozen. Where's your Dixie at?
Can you see it on here? So like...
Oh, I can see your chart, yeah. I'll use your chart. Mine's frozen for some reason.
So looking left, we have previous support from the 3rd of December. This is on an hourly chart. And then, that's kind of run into that consolidation zone there. But on the daily...
Yeah. So we got a bit of a mild recovery in the dollar today.
Yeah.
But so compared to recent declines, though, it's not much, is it?
Yeah, we basically just gapped up today, ran into previous consolidation, and for us, I'm basically looking to see if where's my chart here? So the high of 90.6 from the 16th, so last Wednesday. If we can get above last Wednesday's high, then I'm willing to say that the dollar's bullish. But at the moment, we've just gapped up on the news, I think, and we'll have to wait and see if that translates into WTI or the indices later. But I
mean, I think another big thing you got to consider for the dollar right now is, and this isn't usually the case, but we're seeing so much volatility in GBP at the moment.
Yeah.
Well, if we continue to see that volatility, like I'm just looking, GBP is nearly 2% lower on a combination of this UK coronavirus strain. We already talked about that, but also the fact that Brexit negotiations still completely deadlocked. I mean, that's all there is to say about those negotiations, really, isn't it?
Yeah,
complete deadlock.
I saw that. The news wires were sort of saying that Boris is going to call von der Leyen again. It's like they had a meeting and they had a dinner. Like surely everything that could have been said has been said on that front, and it's just down to they need to get this fisheries and whatever else the list of demands is, but I don't see how the level playing field fisheries can be compromised without someone losing face. So,
I agree. I don't see how at this point they can get a deal. I mean, how many days till the end of the year? 10 days to do it?
No.
That's mad, isn't it?
No.
So,
I think this weekend gone was the real crunch. Barnier was definitely determined to try and get something done this weekend.
Yeah, exactly. Because next weekend is Christmas, isn't it? So, it was Friday. It's Christmas, and all the politicians aren't going to want to do Brexit negotiations on Boxing Day.
Maybe that was the reason for the lockdowns, because we were supposed to have 5 days of Christmas, weren't we, for the UK, and now he's reduced it to 1. So maybe that's just so they can carry on the negotiations. It's a Brexit Christmas.
Maybe. I think you're onto something, mate.
So looking at the chart quickly on the daily. So we took out a load of liquidity from the spike swing highs from earlier this year, and now late last year as well. So now, if Brexit talks do not resume in any way positive for the pound, we could be down at least to 1.29 by the end of today by the looks of it, because it's really it's this channel that was rising up from early September. If that breaks lower, then support comes down at these swing lows.
It's done for, isn't it?
Yeah. But fingers crossed the pound can recover at some point.
Yeah, but if it doesn't, and if it does get destroyed because of, the things we've just been saying, then Dixie's going to go a lot higher.
Yeah.
Regardless of what happens with other things, Dixie's got potential. This could be the savior for the dollar, which is, apart from today, it's just been getting smashed recently, hasn't it?
No, definitely. And I think with the sort of trade deficit and the fiscal expansion that's basically been pushing down on the dollar, the sort of stimulus packages and the low interest rates there are actually bullish for the dollar. So if trade things
stimulus as well, that's a good point.
Well, hopefully
you never know. Like this could have been like the low for the dollar and the high for the pound, unfortunately. So, so we'll have to wait and see.
Could be. I think, just personally, for me, like I'm still quite bearish on the dollar in the long run, just because I think things can get choppy in the next couple of weeks because of like, you know, Brexit and the things you've just been saying about how potentially the market might see the stimulus package is dollar bullish, but the overriding themes, I think, are still dollar negative. For example, like the Fed, they still super dovish. They want to keep real interest rates as low as possible. Yeah. And then we might have some hiccups with bad coronavirus news on these variants in the coming weeks, but as long as the vaccination programs remain on track, I think there's still, you know, a good likelihood that the 2021 global economic recovery is going to be really strong, and that will probably be a negative for the dollar, purely because it will be bullish for like EM, you know, it'll be bullish for like Aussie and Kiwi and CAD and all these other currencies at the expense of the dollar. So that's my long-term outlook.
Yeah, and I guess I'll just be like monitoring bonds and yields, and then sort of seeing if they give any more clues. I thought gold was given a clue that, you know, that was just selling off for whatever reason it was. Maybe it was just liquidation of assets and stuff to get more dollars. But if there is some sort of insolvency event and there's not enough dollars in the world at some point, that would be demand side for dollar. So that could be the dollar bull case, but yeah, we haven't got to that point yet. So we just have to
not yet.
Keep watching the news and hope for the best for that. But anything else you'd like to say on the fundamentals?
I think those are the main topics covered, really. I mean, not really anything else, to be honest, for this week. Right. In terms of what's ahead this week, I don't want to say it's a complete write-off because we have got some important themes going on.
Yeah, it's getting compressed as well.
Yeah. But in terms of the economic calendar, there's not really. I doubt there's going to be any big market moving events this week in terms of like economic data or anything. It's all just focus on Brexit, stimulus, and pandemic related news like vaccines and lockdowns. Yeah. Okay, great. All right. Well, we'll catch up again next week, and nice. We will see how this all pans out. Merry Christmas if I don't speak to you before then. Yeah, we'll speak, mate. But Merry Christmas to everybody watching the video. And we'll see everybody next week. Excellent. All right, take care. All right, ciao.